This is Fintech Insider News. This week, Pipe is here to tell us about its new partnership with Uber. Accion Ventures tells us about its new fund to promote financial inclusion. And Revolut, with a new license, has its sights set on the UAE. We'll be discussing all of this and more on today's news show.
This episode of Fintech Insider is brought to you by Fireblocks, the stablecoin infrastructure platform trusted by top global businesses such as Visa, BNP Paribas, Revolut, and more. Fireblocks powers over $100 billion in monthly stablecoin volume, helping PSPs, fintechs, remitters, and banks issue, move, and manage stablecoins, all securely and with built-in compliance. Get complete control to build your stablecoin strategy, manage liquidity, and on-off ramp in over 60 currencies, all at scale. Learn more at fireblocks.com.
This episode is brought to you by LinkedIn. Healthcare professionals can lead their careers with LinkedIn. Discover jobs by specialty, preferred shifts, and even desired salary. From mental health therapists to radiology technicians, it's now faster and easier for healthcare professionals to find the right fit. Learn more at linkedin.com/healthcare. Side effects may include faster job placement, improved work-life balance, and increased career satisfaction.
And welcome to episode 997 of Fintech Insider. Brought to you by 11FS, the 5-time consultancy of the year that works with banks, digital banks, investment firms, and fintechs to build the next generation of financial services. I'm Benjamin Ensor, Director of Research and Strategy. So this week saw the return of one of our favourite TV shows, Only Murders in the Building, a story about a ragtag group of podcasters who uncover scandals and solve murders in their apartment block. Thankfully, we don't have any murders to solve here at Fintech Insider, but we do have a few mysteries, big reveals, and maybe even a few scandals from the world of financial services and fintech to dig into. So let's get into this week's show. I am delighted to be joined by 3 fantastic fintech experts who are here to help me, so let's meet them. So first up, we have a very big Fintech Insider welcome to Luke Voiles, Chief Executive of Pipe. Welcome to the show, Luke. You've got some exciting news that we'll get into a little bit later on, but please can you introduce yourself and Pipe to our listeners?
Yeah, sure. So I'm Luke, CEO of Pipe. I've been here about 2.5 years. Pipe is an embedded financial services company that brings most of the banking features into the software where small businesses run their business every day, where they're completing their tasks every day. So it's just white label embedded finance, starting with capital. We also have card, spend management, bill pay. We're looking at AR, embedded accounting, embedded payroll, like all money in and money out that you can think of. Like that's the roadmap for Pipe. 3 down, we're in 4 geos, US, UK, Canada, Australia, soon to be in Japan, France, Spain, Germany, Netherlands as well in 26. So multi-product, multi-geo, trying to help small businesses save time and succeed.
I see a lot of time on aeroplanes in your future.
With 4 kids at home, that's going to be a challenge, but yes, we'll make it work.
Next up, we're delighted to welcome Amee, Parbhoo, Managing Partner at Accion Ventures. Welcome to the show. You also have some exciting news to share, but please could you introduce yourself and what you do at Accion Ventures, please?
Yes, thank you so much for having me. I'm Amee Parbhoo, one of the managing partners of Accion Ventures. We're a leading early-stage fintech fund focused on inclusion. So everything we do is investing in early-stage startups that are reaching underserved small businesses and consumers across the globe. We have a footprint across Africa, Asia, Latin America, and the U.S. We've invested nearly $60 million in 76 countries, operating in 30 countries to date. So pretty large footprint. Excited to be here today.
I suspect you're more well-traveled than Luke is about to be.
Certainly.
It's fantastic to have you. And it's also a very warm welcome back to the show for Uneesa Zaman, founder of Ayda Invest. It's really great to have you with us. Please, can you tell our listeners, or those of you who don't remember your last show, a little bit more about you and Ayda Invest, please?
Absolutely. Thank you so much, Benjamin. So Ayda Invest provides on-demand financial literacy to Muslim women powered by AI. We are based in the UAE and the UK. We work across a plethora of different corporates, but also consumers, providing that digital first access to financial literacy. Pleasure to be here today.
Fantastic. Well, welcome to you all. Okay, so let's get into the news. Now, our first story is that Accion Ventures has closed a $62 million fund to invest in early-stage fintech. The initiative, now operating under the name Accion Ventures, continues an investment strategy that has been in place since 2012. Over this period, $59 million has been invested into 76 companies across more than 30 countries, with 13 exits recorded. Supporting investments across Africa, South and Southeast Asia, Latin America, and the United States, Accion Ventures seeks out innovative tech companies that promote financial inclusion and have the potential to generate attractive returns. The fund seeks to address gaps highlighted in the Global Findex 2025, which reports that 1.6 billion people remain underbanked or inactive account holders around the world. The most recent initial investments by the new fund are Paid HR in Nigeria, Foyer in the United States, Finfra in Indonesia, and Flowcart in Kenya. Amee, there's no better person to have on the show to ask questions about. So many congratulations to you and your colleagues on the fund. Can you tell us a little bit more about it, please?
Sure. Yeah, no, incredibly excited to finally be able to announce this new fundraise. Like you said, we've been investing. We've been at this for a long time, since 2012, investing really since before fintech was even a word, in early stage, largely seed stage fintech companies. And as you said, focused on low-income consumers, small businesses across the globe. So this mass population that's typically underserved by the global financial system. And yeah, we're really excited. This new fund essentially nearly doubles the amount of capital since our last fund. And it really builds on this decades-long investment strategy where we're focused on delivering social and financial objectives through early-stage venture. We're excited about the LPs we're bringing into this fund. We're bringing in both commercial and impact-oriented investors, really trying to prove out this sort of double bottom line of what we're trying to do. And, I've been working in fintech for a very long time and there's no question that this is, I would say, the most exciting time to be working in our space. There's just tremendous innovations that we're seeing across the globe. Adoption of digital payments is higher than it's ever been. I know we'll talk about embedded finance, but the use of embedded finance, there's new infrastructure. We're seeing all kinds of things that are modernizing financial systems. So we've made tremendous progress, but there's still so much more to do. And that's really where we see technology playing the role to help fill that gap and what we look for when we invest in companies. So really excited about this new fund.
I suppose a skeptic might say, well, surely all of these opportunities are played out already. Surely, people have already invested in all these things. But evidently, that's not the case, not what you're finding at all.
No, definitely not. I think we're just scratching the surface. I think it was the BCG came out with a report earlier this year, right, around fintech and saying, fintech revenues are 3% of incumbent financial services and banking revenues globally. So we're really at these early innings for fintech, being able to do more and, things like what Pipe's built. There's infrastructure that's being built, right, to enable non-financial players to be providing financial services in a new way. So all kinds of new actors. Again, we focus our days, looking at solutions that are reaching small businesses in places like Nigeria or India or Brazil. They are not being served, whether it's credit or it's payments or it's insurance. There's just tremendous opportunity. So we are by no means seeing a lack of pipeline in our geographies.
Just on that subject of geography, there's one outlier. You name all of these relatively lower income countries: Kenya, Indonesia, Nigeria, and so on. And the United States, which is, of course, one of the wealthiest countries in the world. What's going on there? What are the opportunities? What's drawing you to the United States?
We have always had a presence in the U.S. and always made investments here. The reality is, we have a more, right, this isn't a matter of opening financial bank accounts for people. People aren't left out in that regard. But when you think about the financial health of Americans, it's probably never been worse. The ability to access capital when they need, the ability to have financial products, for wealth building, it's limited. And I think there's tremendous opportunity there. Even the small business gap, I mean, we saw since COVID, there's immense need for products that are better tailored, better contextualized to the needs of Americans. We invested last year in this company, Foyer, that you mentioned. Foyer is helping first-time homebuyers save for and be able to manage through the home buying journey, which, Luke maybe has been through, but buying a home in the U.S. is by no means an easy process, particularly if you don't have, the wealth of past generations to help you through that process, right? So, being able to serve those kind of problems is huge. And to be quite honest, part of our global mandate is bringing learnings from other geographies. And I think when we first got started, we were particularly working in the U.S. because we said we can bring the learnings of what's happening in the U.S. to other geographies and emerging markets. But I've seen time and again, we're actually bringing the learnings of emerging markets oftentimes to the U.S. I mean, we are behind in our country when it comes to real-time payments, when it comes to a lot of access that places like Brazil, India have solved. So I think there's a lot of cross-learning we just continuously see that allow us to invest here in the market.
Nice. What's your view on this, Luke? Are you seeing that same kind of cross-pollination across countries, across the different markets you're working on? Are you surprised to see the States sort of on a list of, mostly less well-developed economies needing lots of support for early-stage fintechs?
I was an investor for half my career. I think what's blowing my mind with this is that you're sourcing in 30 different geos. I don't know how you do that, with a small team. That's magic, right? To be able to get in, find the founders, filter for the right ideas, and then invest. That's amazing. That's probably your superpower. I'd love to hear more about that. But I think the other thing is I've seen incubations happen where early wage access took off in the US, and then some of the funds would go incubate, find CEOs, start them in the UK, start them in other geos. And so that cross-pollination happens. I have I guess I don't have examples of it happening the other way, but I'm certain that it is because in India using cell phone data to underwrite consumers. Yes, that might work there. It doesn't work in the US because of data regulation, but it could work in different places in the world, and it's awesome. PayJoy, PayJoy is a great example around the world of giving people access to phones that may not have it, right? I have a deep connection there because effectively the CTO of Square Banking with me is now the CTO of PayJoy. I love seeing those super beneficial products that can help people get access to a phone that just changes their life to be able to just have that and go do things, right? And so it's just so cool to see it happening actually. For Pipe, it's really hard to go do multi-geo, right? And so we have to take an approach that a modular approach where we use something like an Alloy to do KYC, KYB. And that engine allows us to link different data sources in different geos. This layered modular approach, you mentioned that earlier, right? We use Airwallex to move money because Airwallex exists in 40 to 80 geos, depending on the product. It lets us go really fast. We had an announcement on Airwallex, I think last week, that we're using them to move money in different geos. They do issuing, they do acquiring. They're an infrastructure layer for anyone to actually build financial services on top of. That allows Pipe to focus on credit risk and customer experience across all the products I mentioned earlier, right? So I love that these international things are happening so fast. It lets all of us do things multi-geo for the first time. I used to go to the board meetings at a tiny bank in Texas. It was a 100 million AUM bank, and trying to imagine a very small community bank in Texas, thinking a 100 million AUM bank, thinking being able to do something globally like this, 20 years ago, 30 years ago, no way. It's where we're at. It's amazing, but I'm impressed that you're doing this in 30 geos and finding because I was a credit investor, right? And the regulatory diligence and the risk diligence is so different in every geo. So you just have to find the right leaders, I think, and the right founders that
Definitely.
think about risk the right way, because you just have to trust that they're going to do it right. You don't have time to diligence it all in every geo. There's no way.
Yeah. To be multi-market as a fund is a totally different thing than being multi-market as an operator. So, complexity that you deal with is totally different. But no, I think for us, yes, our companies now operate in 30 countries. We focus on, probably 10 core markets. And you can probably guess them, right? They're the markets where they're large addressable markets. There's talent, entrepreneurial startup ecosystems. The regulatory environment is friendly toward innovation. But then what's been really exciting is just to see companies that may start in that one market, then scale from there. So we see this particularly in Africa. We've invested in a few companies that started in Nigeria or started in Kenya, and as they've scaled, they've had to figure out multi-market because you have to be able to do that across Africa. But they've also figured out the right kind of go-to-market to allow them to do that successfully. So that's allowed us to kind of expand that. But you're right, like having a local team for us as a fund, focusing on like what we know are our core markets and being opportunistic from there is, really the only way.
Uneesa, I'd love to hear your perspective on this. I can't decide what I'm most delighted about, hearing about early stage founders getting backing or the financial inclusion. What do you like about what Accion Ventures are doing?
Oh gosh, I think there's so much. I think tapping into developing markets and just the plethora of innovation and access and creativity that's going on the ground currently speaking. And I say this as somebody who works quite closely with fintechs and startups in Kenya, for example. I think the innovation is, for want of a better term, wild out there. I think there's so much going on. It's so amazing. It's constantly evolving. I foresee it to continue to evolve over the next 10 years, particularly with the amount of not just innovation, but how the government is sponsoring and supporting these very fintechs on the ground. And it's just really great to hear that there are, initiatives and, Accion are doing as they are in terms of really helping to build with authenticity as well, in terms of the kind of investment they're making and really ultimately changing lives, just not just across a country, but across continents in this way. So yeah, it's fantastic. From a financial inclusion perspective, of course, music to my ears. I think when we look at the unbanked and the underbanked as well, particularly in not just honestly in developing countries, but also developed countries like the US, as much as it is, one of the largest economies, if not the largest economy globally, but it's also got some of the, less economically developed states going on as well. So there's a plethora of things you can really do and how you can help to sort of change and shape the way in which people are able to access wealth. So it can only be a good thing.
Wonderful. Amee, last quick question to you. So you've raised this new fund, which is fantastic. You're identifying lots of great companies. What do you then do to try and help those founders succeed? Because sometimes people have brilliant ideas and maybe don't manage to execute them. What are the sort of most important things you're sort of doing to try and make sure these investments pan out for you and for the founders and, of course, the people they're trying to help?
Yeah, I think first and foremost, we're investing in founders. So we look for founders who have their own plan. We buy into that plan and we're there to support them, right? So we're by no means coming in and trying to operate their business or do anything like that. We're very, very fortunate to work with such strong founders. But then, we view ourselves as the global investors who know fintech. So we come in and provide those learnings. We provide forums for a founder who may be building a verticalized software company with embedded payments to, learn from someone in a totally different geography, founders who are building in a different place. And so those kind of connections mean so much. And then in addition, we actually have a very unique function within our fund that is essentially a hands-on consulting firm that works with our companies post-investment. So again, after investing in 76 companies, all at the early stage, we can kind of come in and say, okay, during diligence, we realized, maybe your credit policy it needs some tweaking, or maybe there's new product development that you're working on. Here's how we can support you. How can we get to work? So we really like to roll up our sleeves and be on the ground and help our companies as they're dealing with those topics at the early stage.
Fabulous. Well, congratulations again to you and to all of your colleagues, and best of luck driving financial inclusion.
Thank you so much.
Okay, our next story is that Revolut is planning a debut in the United Arab Emirates after securing a central bank license. So Revolut secured initial approval for licenses from the UAE's central bank, which approved Revolut's application for so-called stored value facilities and retail payment services licenses. So Revolut now plans to ramp up its hiring in the country over the coming months. Other recent international expansions from Revolut include Australia, Brazil, Mexico, Japan, New Zealand, Singapore, the US, and India. So, Luke, a bit of work to do for Pipe.
I'm not getting licenses in all those places. What they do is insane. I'm happy to chat about that. And
Revolut aims to become one of the top 3 financial apps in every country it enters. Uneesa, as someone on the ground, what do you think? Is this exciting?
I think it's incredibly exciting. I think, in all honesty, it's probably the natural conclusion for Revolut, considering its success and expansion over key markets across Europe, the US, and India, just to name a few, as you mentioned earlier. I think it makes a lot of sense that it was the UAE that they decided to begin with as a natural starting point, if only because most fintechs tend, when they are thinking about the GCC or Middle East, have a sort of reverence for coming to the UAE, I imagine largely because of the established regulatory infrastructure here and there being a high expat population, as well as it, geographically speaking, being such a hub. So it ticks a lot of boxes, I think, and it definitely makes a lot of sense. And I think one of the most exciting things I think about sort of thinking about disruption, and I know that that's one of those key words that we kind of go, oh, can't believe we're using that word again. But I think particularly in this instance, when we're thinking about neobanks in the UAE, I think it's a really exciting time for Revolut because I think what they offer could potentially change the game here.
It's interesting you raised the point about the sort of expat population, because the proportion of people in the UAE who are expats is something ridiculous, isn't it? It's something like nearly 90% of the population. And, Revolut has always led with that sort of cross-currency piece. I mean, you're almost thinking like, what took you so long?
In all honesty, I think it made a lot of sense for it to be now in their journey, 10 years in or so. I think the way in which fintech is really being brought not just to the forefront, but also when we consider AI, Web3, crypto, I think the UAE is really trying to lead the way in this way. And I think it wants to adopt as many key players and bring them into the global table as much as possible. I think definitely with regards to the expat population being, roughly 90%, 9 out of 10 people living here in the UAE currently are expats, it really does make so much sense for them as a market. And then when we segment it into, or fragment it rather into things like whether people are, traveling from, let's say, the UAE to Europe or the US, or maybe they may come from developing markets as well. So considering the offerings Revolut does provide currently, there's something for everyone. I would say the only thing that they would need to consider probably, and possibly rather, how they convey that as a message. Because I think copying and pasting something that may have worked for a European market won't exactly go down here in the same way.
Some of those expats are, of course, Europeans. There are plenty from all other places in the world. Indeed. Luke, I'd love to bring you on this. I mean, I touched on this sort of as we were opening, because there's lots of super impressive digital banks all around the world. Sort of Nubank in Brazil and other Latin American markets, WeBank in China, Tinkoff in Russia. Huge numbers of customers. But Revolut is operating in whatever it is, 40 plus countries now. I mean, how hard is that? How impressed should we all be that Revolut is operating in so many countries?
I think it's nothing short of miraculous, right? So I think the comparison that I have in my experience is that we owned a bank at Square called Square Financial Services. It was an ILC based in Utah. The scale you need to have an actual bank license in a geography is enormous, right? With just the $5 billion in capital that we were running through SFS, that was lending more money than JP Morgan does to small businesses. That is not big enough to actually need a bank internally for Square. The only time that it actually made sense is when they finally got the consumer stuff brought over too from the Cash App side, and then it was actually big enough to make sense. Because the reality is we could have gone back to Celtic and it would cost way less to use a bank partner instead of owning our own bank, right? Until you get to a scale where you actually do start to get savings. And so I can't imagine that Revolut has that kind of scale in every geo it's going into. It just anticipates that it will have that kind of scale probably within 5 years of getting into those geos. The other thing that blows my mind is that Nick famously has 40 or more direct reports, all of which he spends maybe 15 minutes a week with, right? Or every 2 weeks with. And they are running entire geos, right? So he is one of the best hiring people recruiters I've ever seen, because he's hiring GM quality that can run an entire country, highly regulated business, delegates it all to them, gives them the support they need, but just goes. So what he's built is an org structure globally that works, hiring the right people that can do the right stuff with just an amazing product, actually, that he has, like some of the market share he has in the European markets is off the charts. It's crazy, right? And so I've never seen anything like it, right? And they're starting to figure out credit, right? And that is how you monetize this stuff. All the other neobanks, the ones you mentioned, mostly have figured out credit, Nubank especially. But all the other neobanks, especially on the small business side, have a real hard time with it. And you cannot monetize. You cannot make the unit economics work if you're only doing debit interchange. It just does not work, right? You have to actually take some risk and deploy the capital to get the ROI you need on the capital, right? So it blows my mind what Nick's doing. He deserves every penny of the incentive package he has because the numbers are enormous. It blows my mind what they're doing, and I'm super impressed, actually.
It is indeed an astonishing achievement. What do you think about this ambition to be top 3 in every country they operate in? I mean, that's a lot of countries.
I mean, when your competition is like a bank in the US, the experiences are awful. And so it's actually not that hard to beat them if you can execute on experience and on the regulatory and risk part at the same time. They're one of the first that has been able to do the regulatory and risk stuff the right way and have the experience on top of it at the same time. And with product-led growth, they just take market share once they come in. They don't have to pay tons and tons of money to actually acquire customers the way banks in the US do. They just, by word of mouth, they start to grow. Like Square did initially in the US, like they would see someone accepting a card at the farmer's market and then boom, everyone in that farmer's market needs one. And then they go to the next one and then everybody sees it and it expands again. When somebody sees how easy it is to use the Revolut app, we finally downloaded it when my son did a trip to Europe, right? And it just made it super easy for me to click money in and go. Like when I was a kid and I did a backpacking trip, I took traveler's checks, right? And you have to go figure it all out when you got there. But he could text me and say, hey, I need $20 for this, XYZ, right? I'm out of money, can I have more? It's like, doom, there it is. And you can do that cross-border in whatever country he wants to travel in. That's pretty amazing. Like from an experience perspective, there's nothing like it, right?
I imagine there's a couple of younger listeners scratching their head and what on earth is a traveler's check? Anyway, look it up. Amee, do you think, does Revolut help to drive financial inclusion? Do you think, there's a lot of expat workers and so on in the UAE. Is Revolut helping with financial inclusion around the world, do you think?
That's a good question. And that's, I think, one of my, of course, with my lens and the way I look at the world, I'm curious to see how they deliver on that in the UAE in particular. Uneesa, you probably have a much better perspective on this, but I totally agree. I think they've succeeded so much around the world because they have, focused on getting that compliance right. They focused on the customer experience. But I think part of that customer experience is tailoring the right set of products for the population in that local market. And our experience in the UAE is, a lot of those expats are migrant workers, and their needs are around, lower ticket remittances, access to maybe earned wage advance, credit in a very different offering than if you're offering travel perks and different set of products for an expat in Dubai. So I'm kind of curious to see if they even try and move down market and reach those customers who have a very different need, I would expect, from a customer experience point of view. If they start to offer Sharia compliant products. I'll defer more to Uneesa. I'm curious to hear your point of view, but they clearly have a perspective of how they do that and have been successful to date across markets.
Yeah, absolutely. I really think it's going to be a really interesting time for Revolut, considering the nature, the vastness of the population here and the expat communities needing sort of different demands. I mean, it's not a homogenous market by any means. You will definitely find pockets of different communities from all over the globe here, most of whom will require different kinds of services. So whether that be in the remittance sort of ballpark or whether that be in terms of investing, I think something that's going to be really interesting to see is whether they offer Sharia compliant financial products here specifically and what that might look like as well. But I would say, as I mentioned earlier, I don't think this is a case of rinse and repeat and being able to copy and paste the exact same model or product offerings as well. I think because of the nature of the population here, having something localized that feels organic is incredibly important to the general public here. And so I think only time will tell, certainly, about what Revolut will offer and how that will be well received. But I do also believe it shows great promise in terms of the way in which they engage with consumers and have done to date. And can only imagine it can only be onwards and upwards. I mean, I saw actually Nick in a co-working space very recently. So I imagine he's working hard. And, if Amreen, who's the CEO, is listening in, and there are local partners that you're thinking about, give me a call.
Wonderful. Thank you very much. So on that note, we're just going to take a quick pause here and we will be back very shortly.
New Vitamin Water Zero Sugar Pineapple Passion Fruit is packed with vitamins, just like the amount of peas we packed in that sentence. It's packed like your tote bag, the one you stole from your ex, or your overpriced half a studio apartment, or extra rushed rush hour traffic. Packed like your calendar. Triple booked at 5, of course. Grab a vitamin water. Did we mention it's packed with vitamins?
In today's fast-changing digital world, proving your company is trustworthy isn't just important for growth, it's essential. And that's why Vanta is here. Vanta helps companies of all sizes get compliant fast and stay that way with industry-leading AI, automation, and continuous monitoring. So whether you're a startup tackling your first SOC 2 or ISO 27001 or an enterprise manager vendor risk, Vanta's trust management platform makes it quicker, easier, and more scalable. Vanta also helps you complete security questionnaires up to 5 times faster so you can win bigger deals sooner. The results? According to a recent IDC study, Vanta customers slash over $500,000 a year in costs and are 3 times more productive. Establishing trust isn't optional. Vanta makes it automatic. Visit vanta.com/insider to sign up for a free demo today. That's vanta.com/insider.
Before we get back to the news, we've got a quick announcement. The panel for our After Dark is live, and we've pulled together a proper old guard crew. From 11FS, we've got David Breer and Ross Gallagher, joined by Marcin Glogowski from Marketa, plus fan favourites Sarah Kachansky and Charlotte Crosswell. They'll be breaking down the week's news live at Village Underground in London on Wednesday, the 24th of September. You can grab your tickets now at 11fs.com/afterdark. The link is in the show notes. And now, back to the news. Our next story is that Uber has partnered with fintech firm Pipe to offer loans to small businesses. Pipe and Uber Eats have announced an integration that gives hundreds of thousands of American restaurants access to working capital directly within the Uber Eats Manager app. Offers are based on restaurant revenue and cash flow, not credit scores or personal guarantees, with pre-approved capital, flexible repayment terms, and transparent pricing. This aims to address the long-standing pain point of SMBs, especially restaurants, struggling to access fast and fair financing through traditional banks. And we've got the perfect person to tell us more about this. Luke, many congratulations to you and your team on the partnership. Can you tell our listeners a little bit about how it all works?
Yeah, happy to. We're incredibly excited to be working with Uber. It's just a tech company that's changed how we all live, right? You can go click a button and get a car to take you places. You can click a button to have food delivered to your house. It's pretty magical. Super excited about working with such a meaningful company that has kind of changed how we all live. My passion for the last decade has been helping small businesses succeed, right? I was at Intuit for 5 years, watching Scott Cook, train the entire company to just focus on the mission. We're here to help these small businesses succeed. And then going to Square and doing the same thing. The roadmap really has been very similar that whole time, as the underlying small business pain points are the same. Access to capital is the number one pain point for small business. Every survey I've seen on small business, that one pops to the top every single time. It's especially acute in restaurant because the failure rate is pretty high. If they can't get the capital to get over that hump of getting the initial kind of word of mouth and getting the clientele in, the restaurant won't make it. And so we're super excited to help more restaurants succeed. The way it works is really focused on the best possible frictionless customer experience you can imagine, right? So you don't have to go to the bank anymore. We get an anonymized data dump from Uber. We use that, just the credit card transaction history to create pre-approved offers in an anonymous way. Uber's able to put those pre-approved offers in front of the customer via email or in a banner inside the Uber Eats Manager app. When the customer clicks on it, They land on a white labeled page that Pipe is hosting within the Uber Eats manager that says like Uber Capital, powered by Pipe. It explains how it all works. When the customer sees it, they click, and when they click to apply, they're also agreeing for the first time to like explicitly consent to have their data shared with Pipe, right? And so we get the full PII and business information. We already have the credit underwrite done, and once that application is submitted, there's a 98% approval rate because these are true pre-approvals, right? Like only less than 2% get declined, and it's usually because we can't. It's usually for a compliance reason where we can't match the business owner to the business or something like that, or an AUP may pop up, or we just ask for an EIN and they just never respond, for example, right? So very few drop out, and so like that's part of the magical experience. If you're pre-qualifying and declining 30% of the population, that 30% got their hopes up and then their hopes dashed.
It's not a great experience.
And it's a horrible experience. And so like everything we've done at Pipe is to like dial a perfect experience that has no friction, no disappointment, and then you get the money the next day, right? So it's like click, like the first time it's just a few clicks. The second time you draw, it's just one click, and it's a multi-draw offering. So if a restaurant is pre-approved for $100,000 in capital, they can borrow 10 today. They can borrow 10 tomorrow. They can borrow 10 the next day. Like it feels like a security blanket that follows you around. Like the other surveys you see on these businesses is that they don't want capital. They just want a security blanket. They want to know that they can draw the capital down whenever they need it. More like an insurance policy, right? And that's what this does. Like this pre-approval that follows them around with a line of credit-like experience that they can draw any bit of they want. And the future will be to put it in all the pain points, right? So we used to have access points at Intuit that were pay your payroll with capital, pay your bills with capital. Same thing at Square, right? Like pay bill, pay payroll with capital. Like when you're thinking about needing money, you send an invoice. Normally you have to wait 60 days to get paid. Well, click here to draw now, right? Like you basically make it super seamless for the customer to get the capital faster if they need it. And like that's amazing. And we get like our net promoter score is in the 80s, right? Like you can't get an experience like that at a bank. So like that's the difference here. The future is verticalized. Like every task you need to complete as a business will be happening in one spot, and all of the money in, money out banking is going to come hopefully from Pipe for those SaaS verticals to solve the problems. They're solving all the daily tasks that need to be completed to run the business. Pipe will solve all the money in, money out tasks and make it completely frictionless and almost invisible, right? Banking features are not the product. Like they're just the enabler. The product is a SaaS vertical, right? And our SaaS vertical partners solve these problems better than anybody can. Like we couldn't possibly serve 100 different industries. Square can't even do it. Like they're getting beat by toast on Square restaurants. Intuit is a horizontal. And so when Uber Eats is able to solve that pain point for these restaurants of just getting more orders done and delivering food for them, like it's pretty magical. And like we just want to be there in the background, white labeled, and just help them help their customers. And so that's the basis of how it works. It's just a seamless experience.
Are you doing anything sort of different or clever on the sort of credit scoring side? Because you talked about getting data from Uber. I mean, is that down to sort of food level? You can see who's selling burgers and who's selling chicken, who's selling Asian food or whatever. I mean, is there any trends in terms of certain types of food, certain locations? Are you using any data about what those restaurants actually do to do some of your credit scoring?
So with all of our big partners, we get a 3 to 5 year history of every credit card transaction on every customer. That lets you train a bespoke model that sees seasonality, like sees differences. And so because it's pretty awesome because they're industry specific verticals. So we have a plumber and electrician model for our House Call Pro partners. We have the nail salon, hair salon, med spa model for our Boulevard partner, right? But we have a massive restaurant population now and model that works fantastically for restaurants. It's possible that machine learning is taking some of those factors into account, but we don't actually plug those variables in. It really is just the credit card transaction history. So I was a distressed credit investor for a decade, right, before I switched to tech. And so I've seen every which way lending can go wrong, right? From a regulatory perspective, all types of consumer stuff, all types of small business stuff. When I got to Square, it blew my mind. I said, where's the FICO score? Where's the bank data? Where's the consumer and commercial bureau data? You're doing $5 billion a year and you don't have any of that? And the answer was, we don't need it. Like we serve 120,000 customers, $7,000 average size. Remember that 93% of Square's customers process less than $125,000 a year. It was 70% sole prop. none of the banks can serve that population from a business perspective. They try to do it from a consumer perspective, but when you narrow the risk problem to just the cash flows coming through that Square terminal, it may only be half or may only be 40% of the overall revenue, but you've narrowed the data. You have perfect data on that cash flow stream. You advance capital against that cash flow stream. You get paid back first in line. When you take risk like that, it allows you to serve populations that have never been served before because you've narrowed the risk problem to that single data set. Square Capital, Stripe Capital, PayPal Working Capital, Toast Capital, Shopify Capital, they're all the same model, right? It is a fee-based product in the flow of money getting paid back by those cash flows. And then you can narrow to only looking at that. So you don't have the bias of FICO. You can have female immigrant nail salon owner or female immigrant restaurant owner that has never even thought to try to go get capital, and they get a $60,000 pre-approved offer in their product, and they can go open a second location and double their business, right? We're seeing 12% month-over-month growth, month-over-month, which means they're more than doubling their revenue when they take the offers. This is like offer taken versus offer available. Right, it's pretty amazing, right? And it is because you've narrowed that risk problem. That's the difference. And there's more than 10 billion of this happening now, and it's just I really believe this is the future of small business lending. Square already does more than J.P. Morgan. I think I said that before. Like there's so many like high tech companies that are figuring this out, and Pipe's going to enable any SaaS vertical to do this without taking the regulatory risk, without taking the credit risk, right? Like I'm passionate about this. We're going to help millions of businesses.
Amee, I'd love to bring you in. I mean, Luke snuck in a bit of a financial inclusion angle in there just for a moment, didn't he?
Oh, yeah.
Do you think, is there a financial inclusion angle to this? Actually just helping more Americans initially set up businesses or rather succeed with their businesses?
Oh, yeah. No, I'm the choir that Luke is preaching to. Like this is exactly what we do. We talk as a team about verticalized embedded finance. We as a team have invested in companies either that are providing this kind of like the pipes, the infrastructure layer for embedding for all kinds of verticals, or are just focused on construction or logistics or, agri-retail and providing, the marketplace, the software, and then the embedded financial solution. So completely agree. This is the future. I think what's exciting, and I've been working in SME credit for a long time, we've always treated a small business in traditional institutions, we've always treated small businesses as monoliths. They're just a small business that makes under this level of revenue. And generally, we've offered one kind of standardized product. And that does that doesn't do a service to the complexity of a small business. It doesn't meet them where they are, and so the power of embedded lending and what Luke and Pipe are building is that you are creating something that meets a customer. It's just completely contextualized to their needs. It's helping them kind of really, again, not even realize they're taking on a financial product. There's no loan application here. There's no kind of having to deal with a bank and fill in. You kind of are clicking a button and you're getting it and you're thinking about it in the context of your own cash flows, which I think is the power of embedded finance. A lot of the value that we see as well. So that's congrats. That's really exciting.
I don't want to miss the repayment mechanism here. This is the part that is so important, right? We're holding 10% of whatever the revenue is. If you think a restaurant's going to have $100,000 in revenue, and you let them we advance 10,000. If you're holding 10% every single day, you end up getting paid back in a year. If that business has only 50,000 in revenue for the next 2 years, it will take them 2 years to pay us back. And that's just a built-in relief valve, just how the product works. We're buying 10% of the future cash flows. If the future cash flows are lower, it takes way longer to pay us back. So it's like way better than a term loan then, where a term loan is like 12 equal monthly installments. And if your revenue gets cut in half, you still have to make those 12 installments, and it's tough. So like for the slow payers, this is the most friendly product you can imagine for these businesses.
And I think particularly for this segment for restaurants, which we know seasonal businesses. I live in Washington, D.C., there's a lot of data around just like the drop in restaurant. Restaurants are closing every day. There's real challenges for that. It's like to be able to have something that still allows them to grow and kind of do their business, but without that pressure. It's a much better design product.
Uneesa, what's your take on this?
I was going to say, excitingly, what it makes me think is it's sort of like innovation meets the American dream to some extent, because it's investing into smaller businesses, ultimately speaking. As Amee correctly said, when we're thinking about restaurants, when we're thinking about mom and pop shops, etc., it's really providing them a lifeline, particularly considering the way in which sort of small businesses are going, the high street is going. It's sort of providing another lifeline, and particularly looking at it from a financial inclusion lens, we can really provide sort of that additional access to finance in a way that not only feels sort of tangible or accessible, but also is ultimately something that can really help spur and grow the economy as well. So I think it's really exciting, and congratulations. So
Indeed.
Thank you. I think on the inclusivity piece, like Square has the stats to back it up. I was so proud to be able to share them all the time, which is more than 60% of the advances went to women-owned business. More than 33%, I think, or 35% now went to minority-owned business. When you're not pulling FICO, when you don't get stuck in that world where you have to have a loan to get a score, and you have to have a score to get a loan, and people are just left out, when you're only using the results of having 10 seats in a nail salon, seeing those seats filled 10 times a day each, and see dead consistency for 6 months, that risk is so easy to take. You don't need to know what the FICO score is. You don't need to know what the expenses are. You're just like looking at the quality of that business's revenue coming in and advancing capital against it. Like, it just magically opens up whole populations that have never been served before.
I am curious, Luke, how you think about the affordability of the product with time. I think merchant cash advances have been a huge value creator, huge innovation, but still are fairly expensive for merchants.
Mm-hmm.
How do you think about bringing down that cost with time, particularly given all of the risk mitigation that's kind of built into the product?
Our average portfolio cost is in line with personal credit card, right? It's actually not that high. The one thing that some people mess up is when people do pay back super fast, the annual cost can go too high. And that's the unfriendly version of MCA, right? Pipe actually forgives the fee when people pay back too fast, right? So you keep it, you get rid of that negative component by forgiving fee on fast payers, and you never go to a rate that's off the charts, right? You can just cap it wherever you want. This is why I love fintech so much, right? We talked about slow payer, like way better than term loan for slow payers. We talked about line of credit like the way Max Levchin talks about buy now, pay later. I love it because you don't get stuck with revolving and like a revolving consumer card forever. You have this like discipline of having to pay these things down because they amortize. Ours is the same. It's line of credit like. You can use whatever you want whenever you want, but every draw is a fully amortizing thing attached to some of the cash flows. So it's better than term loan, better than line of credit, better than any of Square, Stripe, Toast, Shopify's products because we're the only one that caps the fee, right? And so Pipe is the first to do multi-draw capped in many geos at once, right? It's just a new thing. And that's why fintech is so awesome, because you can just dial it to solve the problems of the underlying small business, handle risk in a way that makes sense so you can actually have the money from capital markets, because each draw is a separate thing that the capital markets can buy at the end of each day. You have to solve for all these constituents. And the partners are so happy because you're making their customers so happy, right? Like, this is the first truly friendly version. I think the problem with MCA back in the day was like a whole layer of bad guy brokers that would like double the fees. And like, that just doesn't exist here because we're interfacing directly with the small businesses, right?
Fintech is indeed awesome. I think you've composed a new tagline for us, Luke. We must go on to our next story. I'm loving this. So many, many congratulations to you and your team again. It's fantastic. Okay, we'll do our next story a little bit faster than we would have done, which is that digital bank Snappi has launched in Greece. So Snappi, which is a Greek digital bank, has gone live to consumers after securing a universal banking license from the European Central Bank last year. Built through a joint venture between Piraeus Bank, core banking software vendor Naytech, and its partner Codrus Capital, Snappi is positioning itself as Greece's first fully digital bank. The digital bank offers Greek IBAN accounts, virtual and physical bank cards, and a competitive 3% interest rate, as well as SEPA transfers, utility bill payment, and cross-border transactions. In a departure from many digital firms, Snappi emphasizes its no-bot reliance, no scripts, no outsourcing policy, claiming to be among the few European digital banks to offer such direct, human-led service. So, was anyone else disappointed that Snappi's logo was not a turtle? just us? What about this point about, it's fantastic to see, more digital banks and so on, but do customers care about this sort of human support? Uneesa, what do you think? Is that a winner?
I actually think in an AI first world, this is actually turning things on its head. And I think it's actually probably sort of like innovation backwards sort of thing, where we're providing an innovative product that's existed since yesteryear. But I think when we even sort of chart back to looking at Monzo from its very inception, it was very much human first, building that contact, building that clientele and that rapport with whom you're serving. And that was really the trigger for the success of apps like Monzo, Revolut, etc. right from the beginning. I think naturally as things evolve, we tend to look at how we can provide the most quickest, the most efficient way in which we can serve customers. Makes total sense. Getting as many numbers through the door also makes sense. Serving them quality also makes sense. But I think if we're, charting to looking at Greece and the sort of fintech landscape there comparatively to some of their sort of European country neighbors, I think this definitely is an approach that seems to be something that could potentially be a winning card for them, certainly.
Amee, what do you think of this? I mean, do you think customers care about banks being national? Do you think that sort of being a national player cuts much ice with customers? Do customers just want the best solution, or do you think there are people who are like, well, actually, I'll go for this one because it's from my country rather than being, let's say, a Revolut?
Yeah, I can't speak to the context in Greece specifically, but I mean, I would believe eventually people care about the product that's meeting their needs the best, right? And the customer service and the customer engagement that's serving them best. So it's a little puzzling to me to have like a fully human-driven kind of strategy here when we're living in a world where AI is clearly providing so much efficiency in so many different ways. I will say, I mean, we've always been a believer, especially in our markets, where human support is critical to building trust. It's critical, especially for the customers we serve, to be involved in some part of that onboarding journey. But there's so many other things we're seeing that does not have to be, human support driven, whether it's collections or it's certain elements of cross-selling and upselling. So I'll be curious to see how this evolves. And if they truly do stick with humans, no outsourcing for every part of it, or I think it's inevitable that you'll start to see kind of parts of the journey that do not need to be really human-driven be automated.
Despite the lack of a turtle, I'm loving the branding of Snappi, and they're going to introduce Snappi Pay Later. Luke, you were talking about credit earlier when we were talking about Revolut. Do you think that's a smart strategy, starting with or leading with a sort of pay later, buy now, pay later proposition?
It's interesting, like the access points matter on buy now, pay later, right? Like the reason why Affirm grew so fast and Klarna grew so fast is because Affirm partnered with someone like a Shopify, right? B2B2C. They landed millions of consumers in one go with one partnership and have done $9 billion of buy now, pay later to Shopify shoppers. So I think that's the only access point for buy now, pay later that actually works. Like to then flip it. So there is the Affirm Plus card, or whatever they call it now, where once you have the customer, then you can actually put the buy now, pay later on a card. But it's just really hard to get the conversion. I think the other piece of this, it's just an affinity bank. If you want to be a nationalistic affinity bank, I don't know any affinity banks that ever worked. Most of them have shut down by now because they all tried to, again, monetize with debit interchange. I like that Snappi's trying to use credit in a form of like buy now, pay later, but to acquire a customer in a cheap enough way and then get them to use your card with buy now, pay later is just it's almost a bridge too far from my perspective. And so, but like back to the human point though, there are absolutely moments where there's uncertainty and doubt. And if you can talk to a human to just hold your hand at a certain point to explain something or talk about something, then that's enough to actually like get them across the line. So we have like 25 people in Atlanta. When folks get into the application for this capital product and they don't really understand how maybe the payments work, or like it's too easy and they think it could be fraud because it's only a couple of clicks. Like this is too easy. This doesn't make sense. If they can talk to a human for 5 minutes, 50% more of them will actually take the offer because they understand it and they want to go on. We're just holding people's people's hands. And so if you have a human holding their hand at the moment of uncertainty, that's huge. If you're just like using AI to sell and do whatever, we will always have humans to do that most important piece. We have AI agent bots, like voice agents that can call and say, hey, we need your EIN. Can I text you the link to upload your EIN? Like that specific task is easy for AI. But if you need to actually like hold somebody's hand and explain to them how a product works, like humans are still required, right?
On that note, we're just going to take a quick pause here. We'll be back shortly. Okay, now for a quick look at one more newsworthy story this week that we don't have time to cover in full, but we think you'll find just as interesting. Which is that the UK's Lloyds Bank is closing on a £120 million takeover of fintech Curve. Lloyds Banking Group could announce as soon as this week that its takeover of Curve is complete. Curve enables users to combine multiple cards into one digital wallet, positioning itself as a rival to Apple Pay and other payment services. The purchase is a strategic move by Lloyds to enhance its digital payments capabilities. Curve has raised more than £200 million, including a £133 million Series C round in 2023, but recently paused US expansion and reduced staff to cut costs. Once predicted to IPO for billions, some may find the sale price a little disappointing. And so indeed, Curve is something of a classic case of a fintech that ran out of road because it didn't manage to get to profitability fast enough. There's always that trade-off between growth and profitability, and Curve didn't quite make it to profitability despite the promises of profitability, and that's made it vulnerable. What's interesting to see is Lloyds deciding, actually, there's a bunch of great people and some great tech there to pick up, and the potential for Lloyds to put that at the heart of a new digital wallet proposition from Lloyds. So the question is, can Lloyds actually really turn Curve into an asset for its business? Can it lure and persuade many of its millions of customers to use Curve? And could Lloyds give Curve the scale that Curve needs to get to profitability? And finally, now for something a little bit different from the world of business to finish this week's news show. And this involves a word I wasn't expecting to say on a podcast. A tribunal in the UK has ruled that it is okay to call your boss a dickhead, which is quite rude. Apparently, this is not a sackable offence, according to the tribunal. Kerry Herbert has won almost £30,000 in compensation after she was found to have been unfairly dismissed for throwing the insult at her manager and another director. While the employment judge called the insults inappropriate and regrettable, she concluded that they don't necessarily amount to gross misconduct, especially if said in the heat of the moment. So, Uneesa, what does this sort of tell us about a culture? If somebody's throwing, extremely rude words around, does that mean that employee is under a huge amount of stress? Does it mean there's something potentially off with the culture? What does it tell us about the environment where that's happening?
I just miss Britain a lot when I hear stories like this. I think on a good day, it's a comical story that you might find in the Metro. On a bad day, it's like opening Pandora's box. So to what end is it okay to call your boss a dickhead? I'm not sure. I would say perhaps that to this story, it kind of, I guess, depends on your relationship as well. There's probably nuance to this as well, what your relationship is like with your boss or with your team and what that may be. But I would, hazard to say that maybe calling your boss a dickhead is just generally not the best idea. Probably not going to get you that far up the promotion line either, I imagine. But it's really interesting that she received a payout for this and what was, I guess, judged as, unfair dismissal. So I think it's really interesting. I think it's not necessarily telling of the culture, but I think it's more so telling of maybe what workplace environments can be like, perhaps, for some people.
Luke, let me throw it over to you. What do you think? And I realize as a chief executive, this is a little bit of a troublesome story because obviously you can't say, oh yeah, I think this is great, because then all of your team are going to be rude to you tomorrow. But do you think people can make mistakes and be forgiven?
I mean, certainly is the answer. Like, I'm sure I've thought this about bosses I've had, and I'm sure people have thought this about me, like when we're trying to get stuff done. But like, the thing that bothers me more is like, what it's the free speech implications. Like in the U.S., you can actually flip off a police officer and it's A-okay. Like people have flipped off like all kinds of people. So, but that's allowed. It's okay. It's interesting to see. I don't know. I don't understand free speech in the UK because some of the public stuff is arrestable and some of the private stuff is not and protected. In the U.S., we're very much pro free speech, and if you curse out your boss, it's probably okay. But there's other remedies from a legal perspective, right? And for folks. And so like this one, it's kind of a sideshow of a story. I'm sure there was other stuff going on where like the person, like they wanted to fire anyways. It was just a weird fact that like that one thing went to the tribunal to get solved and it came out in a different way. So I wouldn't really read too much into it, honestly. It's just kind of a weird case that made national news. I'm sure people get cursed out at work all the time. It's usually the other way around, I guess. But people should stand up for themselves. Right. And I'm glad they did. Right.
Yeah, it could indeed be that she won the case because they used her rudeness as a reason to claim gross misconduct, perhaps because they did want to fire her. But actually, that wasn't sufficient cause to fire someone. I think that's one of the differences between obviously the States and the UK and other European countries. There's more employment protection for employees. It's that a little bit harder for managers. If they don't like an employee, well, tough, you hire them. They have to do something badly wrong.
It's interesting where employee protection sits from a free speech perspective, from a who trumps what perspective. Like, I'm licensed to practice law in Texas. I never practiced, but like it's a fascinating legal argument. Like, what's more important? I don't know.
Are there any other faux pas that we think people can do at work? Where they do the wrong thing and they get rewarded for it, or they say, not necessarily say the wrong thing, but Amee, do you think there are any sort of outbursts at work that may be unjustified?
Gosh, I have to think about that. I'm not sure.
There's a famous like Elon Musk email about like when it is okay to curse, right? And it's like when you're passionate or excited about something, it's okay. If you're saying something derogatory about someone else, it's not.
Yeah.
Right. Like, so there are guardrails you can put in place where like passion and excitement's fine, but like don't never do it in a way that's negative to some other human. Right.
Yeah.
That actually resonates. But it's you can find it on the internet. It's very interesting.
I think I've just always worked in very global teams and environments where, what may be completely not a sensitivity for me as an American may very well be a sensitivity for someone in a different part of the world. And so I think it's just like, I don't know, being thoughtful and understanding who might be responding to what you're saying. That's the kind of culture I think all of us would want to work in.
I'm also married to a Canadian, and like they're the nicest people on the planet, but they curse on average 10 times more than anybody else, like hockey players, right? So it's like there's a balance, right?
Fantastic. All right. Well, on that note, let's wrap up Fintech Insider News, although I'm tempted to recast it as Fintech is Awesome News. Thank you so much to our three guests. Where can people find out a little bit more about you and your companies? Luke, where can people find out a little bit more about you and Pipe?
I'm pretty active on LinkedIn, so just reach out, connect with me, or follow me on LinkedIn, but also pipe.com. We just redid our website again, framing Pipe as the financial OS for small businesses. So I'm excited about the future there.
Uneesa, where can people find out a bit more about you and Ayda Invest?
Well, you can find out a little bit more about myself on LinkedIn, but also at Ayda Invest on social channels and aydainvest.com as well.
And Amee, where can people find out more about you and about Accion Ventures?
Yeah, LinkedIn is where to be. Also on LinkedIn, fairly active. And then our fund, Accion Ventures, is also on LinkedIn, as well as you can look for us online, where we have all of our portfolio, all of our latest research as well.
And as for me, Benjamin Ensor, you can also find me on LinkedIn. So thank you all so much for joining me. Thank you to our listeners for listening to today's Fintech Insider. If you liked what you've heard, please do follow us, recommend us to your friends. Please do share the podcast. If you want to join the conversation, please seek us out on social media. Just search for 11FS or Fintech Insider, or email us at podcasts@11fs.com. Thank you all so much again, and goodbye.
Most successful fintechs didn't begin with a sprawling suite of features. They started by doing one thing exceptionally well, something that solved a real, underserved customer need. At 11FS, we offer the research, design, and product expertise to help you not only identify your differentiator, but to take it to market as well. Through our proposition labs, our experts can move you from a vague concept to a validated investment-ready proposition, quickly and confidently. Launching a new fintech venture is hard, but with the right process, team, and insights, it doesn't have to be a gamble. Visit 11fs.com/ventures to find out more.
In today's fast-changing digital world, proving your company is trustworthy isn't just important for growth, it's essential. And that's why Vanta is here. Vanta helps companies of all sizes get compliant fast and stay that way with industry-leading AI, automation, and continuous monitoring. So whether you're a startup tackling your first SOC 2 or ISO 27001 or an enterprise manager vendor risk, Vanta's trust management platform makes it quicker, easier, and more scalable. Vanta also helps you complete security questionnaires up to 5 times faster so you can win bigger deals sooner. The results? According to a recent IDC study, Vanta customers slash over $500,000 a year in costs and are 3 times more productive. Establishing trust isn't optional. Vanta makes it automatic. Visit vanta.com/insider to sign up for a free demo today. That's VANTA.com/insider.